In today's lecture, as we have just said, during the course of a business, the owner may have withdrawn some amount of money for his personal use. On the other hand, may have introduced some amount of money to the capital. The money withdrawn for his personal use will be added back to the capital in order to determine the real profit, while the new amount of money or assets introduced into the business will be deducted. So what I'm saying here, if the owner of a business introduces a new capital, maybe somebody gave him money, or with his gratuity, or that his son sent him some amount of money, he decided to inject it into that business. It means at the end of the day, when you calculate, you have to deduct it from the capital, because that one is not included with the opening capital. But if in the course of the business he withdrew some amount of money to solve his personal problem, at the end of the day you have to add it, because it is equally part of the capital. It is a profit made out of the capital. So now we are going to do some illustrations showing how you can calculate it at the end of the day. A foodstuff seller did not keep his proper books of his business, but was able to provide the following information. Now look at it. This is the opening date, the opening year, the year he started that business, 1st of June 2020. That is the year and the month. He has some of these things in his business. Number one is equipment, worth of 80,000, and then at the end of the year the equipment has increased to 90,000. Another one is stock in trade, 120,000. At the end of the year it has 180,000. It has increased. Debtors, 52,000. At the end of the year it increased to 60,000. Motor vehicle, 2 million. At the end of the year it has increased to 2,600,000. Creditors, 85,000 as at June 2020. As at May 31st of May 2021, it has increased to 70,000. It reduced, which means his creditor has maybe paid some, it reduced to 70,000. Then now cash at hand. The cash is 100,000 as at June. Now as at May 2021, he's having 150,000 naira cash. He drew 3,000 naira monthly for his business, for his personal use. From that business, he withdrew 3,000 naira monthly. Mark this, monthly, because I'll be explaining this thing as we move on. He withdrew 3,000 naira monthly from his business for his personal use. His son sent him 200,000, which he injected into the business during the year. You are required to prepare his statement of affairs to determine his profits. Now look at it. Now, solution. Statement of affairs at 1st of June 2020. Stock in trade, 120,000. Debtors, 52,000. Equipment, 80,000. Motor vehicles, 2 million. Cash, 100,000. Creditors, 85,000. Capital is 2,267,000. You know how I got this capital? Capital is the total of this minus the creditors. You will be able to get capital. Remember that two of them must balance. So you can see this minus this one gave you the capital. That's how we got this figure here. So coming to his statement of accounts as at 31st of May 2021, you can see from our records, stock in trade was 180,000, debtors 60,000, equipment 93,000, motor vehicle 2,600,000, cash 150,000, creditor 70,000, capital is 3,013,000. You can see it's 70,000 minus this figure. It gave you the capital from which you can calculate the final or the closing capital of the business. Now let us go to statement of profit as at 31st May 2021. You can see its capital at 31st May, which is this capital, is this amount, less capital as at 1st of June 2020, which means you have to deduct the final capital from the opening capital, the closing capital from the opening capital. You can see it capital as at this, less closing capital, which is this one. So when you deduct it from, you get this figure. Now what are we saying? You have to add back the drawings which he made in the course of the business. And do not forget that we said that he withdrew 3,000 naira from the business every month. He drew 3,000 naira monthly from his business for his personal use. 3,000 naira monthly, which means 3,000 times 12 monthly, that is within 1 year, which is 12 months. You can see it. I added back the 3,000 naira. 3 times 12, which will give us 36,000 naira. You have to add it back to the profit because it is part of the profits of that business. You add it back, giving you this amount, and then less additional capital. We were told that the son gave him 200,000 and he injected it into that business, which is 200,000. At the end of the day, you have to deduct it from that, his capital, which is 200,000 minus 782,000, which will give you this amount. At the end of the day, the apparent profit for the business for the year is 582,000. That is his final profits. And thank you for today.